The letter is already in the mail. And for some people watching this right now, it may have already arrived, sitting in a pile, looking like junk mail, waiting to be opened. The IRS just confirmed that 5 specific types of bank accounts are generating warning letters in 2026. Not because the account holders are criminals, not because they cheated on their taxes, but because their accounts match specific patterns that federal banking and tax regulations require to be reviewed. And the seniors who are going to be hurt the most by these letters are not the ones who threw them away intentionally. They are the ones who never knew the letter was important until the account was already frozen. Today we are walking through all 5 account types, why each one is generating a letter right now, what happens if that letter goes unanswered, and the exact steps you take today to make sure your account is not the next one on this list. Which city and state are you watching from right now? Drop it below immediately. Because these 5 account types are hitting seniors in certain states significantly harder than others, and I need to know exactly how many people in this community have already received one of these letters without knowing what it meant. Drop your city and state right now. Here is account type number 1. The one generating the most warning letters for seniors right now, and the one most people mistake for a scam and throw away. Banks must maintain accurate taxpayer information, including social security numbers and W-9 certifications. If the IRS reports a mismatch or missing information, banks may send letters requesting updated tax details. Failure to respond can result in restricted transactions or backup withholding, and in some cases, the bank may freeze the account until the issue is resolved. Capital Skyline, a name that does not exactly match SSA records. A social security number that was entered incorrectly when the account was opened years ago. A middle initial that appears on your tax return, but not on your bank account. Any of these mismatches triggers an automatic IRS notification to your bank, and your bank responds with a letter requesting corrected information. Seniors sometimes mistake these letters for scams, but legitimate notices include specific instructions for contacting the bank directly. Throwing that letter away does not make the mismatch disappear. It makes the consequence worse. Backup withholding begins. Your bank withholds 24% of every interest payment, dividend, and certain other payments until the mismatch is resolved. AIU Web. Have you verified that your name and social security number on your bank account exactly match your IRS records? Yes or no? Drop it below right now along with your city and state. Because the number of seniors with a mismatch they have never noticed is one of the most important things this channel has ever looked at. Here is account type number 2. The dormant account that is quietly moving towards state seizure right now without its owner knowing. Many seniors keep a rainy day savings account they rarely touch. Automated systems are more aggressive about flagging these as dormant or abandoned. Automatic transactions like interest deposits do not count as activity in most states, meaning an account receiving only interest can still be classified as dormant. A dormant account does not stay dormant forever. After a state-defined period of inactivity, typically 3 to 5 years depending on the state, the bank is legally required to transfer the funds to the state government through a process called escheatment. The money does not disappear, but recovering it from the state requires a formal claims process that can take months. And most seniors whose accounts are escheated never receive a clear notification that it happened until they try to access funds that are no longer there. Elmira. Log into every bank account you have right now, including accounts you opened years ago and rarely use. Verify that each account shows recent activity beyond automatic interest deposits. Make a small withdrawal or deposit from any account that has had no owner-initiated activity in the last 12 months. That one transaction resets the dormancy clock and prevents the escheatment process from advancing. Here is account type number 3. The payment app account that is generating IRS flags for seniors who use Venmo, Zelle, or Cash App to receive money from family members. For the 2026 tax year, the threshold for a Form 1099K has reverted to the old standard: $20,000 in payments and 200 transactions. This means that unless you are a high-volume power seller, your casual personal transfers are once again invisible to the 1099K reporting system. That is the good news. Here is the warning that sits alongside it. Regular transfers arriving on a consistent schedule from the same sender, a child sending monthly rent assistance, a family member sending regular support payments, look like recurring service payments or unreported business income to an automated monitoring system. Not a family member helping with expenses. A business transaction that may require reporting. OK Diario. The most important rule for 2026 is to keep your financial streams separate. A simple memo on every digital transfer, rent split January 2026, or birthday gift, can be the difference between a dismissed flag and a 6-month investigation. Add a memo to every transfer you send or receive through any payment app, every time, without exception. That memo creates a documented explanation that the automated system can read, and a documented explanation resolves a flag before it becomes a letter. Capital Skyline. Which city and state are you in right now? Drop it below again. Because certain states have additional consumer protection rules around payment app reporting that affect how these flags are handled, and I want to make sure this community knows what applies in their specific state. Here is account type number 4. The account with a large unexplained deposit that does not match the documented income on the prior year tax return. When a deposit arrives in your account that is significantly larger than your documented monthly income, a lump sum retroactive Social Security Fairness Act payment, an inheritance, a home sale deposit, an insurance settlement, the automated cross-referencing system that compares your bank activity against your tax return flags the discrepancy. The deposit is not illegal. The money is completely legitimate. But a spike that does not match the established pattern generates a review. And a review that finds the deposit was from a reportable event that was not correctly documented on your return, a home sale with a taxable gain, an inheritance with estate tax implications, can produce an IRS notice assessing additional tax liability plus interest and penalties. Once scammers have personal information, they can file fraudulent tax returns, steal refunds, open credit accounts, and access bank funds. Victims often spend months working to recover lost money, repair credit damage, and restore their identities. Document every large, non-routine deposit before it arrives. Call your bank and tell them what is coming, where it is from, and when to expect it. Contact a tax professional and verify that the deposit was correctly handled on your most recent tax return. That documentation prevents the flag before it is generated. Social Security Administration. Here is account type number 5. The account receiving international transfers that may require FBAR reporting that was never filed. If you send or receive money internationally, to family members abroad, to accounts you hold in another country, to property you own overseas, and the total value of your foreign financial accounts exceeded $10,000 at any point during the year, you are required to file a foreign bank account report annually. The IRS has already issued multiple warnings stating that no online hack code or form entry can increase a taxpayer's refund, and has emphasized that it never contacts taxpayers through social media or asks for personal information through direct messages. Missing an FBAR filing is not a minor oversight. The penalty for an inadvertent failure can reach $10,000 per violation per year. And the IRS automated cross-referencing system is identifying international transaction patterns in 2026 at a significantly higher rate than in prior years. NerdWallet. If you have any international financial activity, any transfer, any account, any property, contact a tax professional today and ask specifically whether your activity triggers FBAR or FATCA reporting requirements. One conversation before the IRS identifies the issue is dramatically less expensive than responding after a notice arrives. Here is exactly what you do right now before a letter arrives that changes your account status. Verify that your name and social security number on every bank account exactly match your IRS records today. Log into every account you hold, including dormant ones, and initiate at least one owner-initiated transaction to reset the dormancy clock. Add a memo to every payment app transfer you send or receive going forward. Contact your bank before any large, non-routine deposit arrives and document the legitimate source of the funds. If you have any international financial activity, contact a tax professional about FBAR compliance today. One final thing. Fake IRS emails promising refunds, text messages claiming accounts have been flagged under new rules, and fraudulent tax help offers that promise faster returns continue to circulate. A legitimate tax service, or the IRS, will never reach out unexpectedly by email, text, or social media, and will never pressure you to act immediately. Every legitimate IRS warning letter arrives by physical mail with a specific notice number you can verify at irs.gov. If any call, text, or email arrives claiming your account has been flagged and you must respond immediately, hang up, delete, ignore. Then call the IRS directly at 1-800-829-1040. Social Security Administration. Have you received any unexpected letter from your bank or the IRS in the last 90 days? Drop your experience in the comments right now, along with your city and state. Like this video if it showed you something you needed to know. Share it with every senior in your family and subscribe right now, because the next investigation covers exactly how to respond to an IRS warning letter before the deadline passes. The system has rules. You deserve to know what they are. Take care of yourself.